to kick off with secured loans, and we're asking, can changing your perceptions actually unlock secured loan opportunities? So that's what we're having a look at today. We do think it's really important to actually raise some awareness within secured loans, especially within the introducing brokers that are sitting in front of the clients and they've got the opportunities in front of the customers, because the perceptions and the attitudes that we have today, if we act on them now, then it's going to be very good and very useful for us going forward when regulation kicks in next year and the changes come. And that's really what we're looking to talk about when it comes to secured loans. So what is it that our brokers regularly see? Do they see a remortgage inquiry, or do they see a secured loan opportunity? And that's the thing that we want to see. So it's fair to say that actually the majority see a remortgage inquiry. When we look at the overall size of the market, last year the remortgage market was worth £46 billion. Secured loans were worth 600 million. Now you might think to yourself, well actually there's nothing wrong with that really, and there isn't. We are very proud of the size of that market, but to put it into perspective, actually the secured loan market at its peak was worth 7 billion. So there's a massive difference. Now again, to put that figure into perspective, that's the size of the world's population. So that is a massive figure. So the size of the secured loan market now is 600 million, okay? And like I say, it is something that we're very proud of, but something that's really important to note from this 600 million is that the majority of this lending was done from a direct-to-consumer point of view. So the majority of that lending was not through brokers recognising the opportunity for their clients for a secured loan. And the clients have basically taken themselves off somewhere else and found another alternative when their brokers were not able to actually source a solution for them. So this 600 million is not as big a figure as it used to be. We're very proud of it in terms of where it's got to, but the most important thing to take away from this figure here is the fact that it hasn't really, the majority has not come from broker business-to-business transactions. When I take you through a journey of where secured loans have been over the last few years, I mean, we look at 2007 and we hit the dizzy heights of about £7 billion a year. Into 2008, of course, we hit a credit crisis, didn't we? It was a global crisis, and lender after lender started closing their doors. The market dropped 84%. The funding for FLE, they said that the lending had actually dropped by 84% by 2009 in August. And then by December 2010, the secured loan market was actually worth £16 million. Now bear in mind, we had gone from 7 billion to 16 million in a little under 2 years, and it's a huge difference. Remember I mentioned the world population at 7 billion? So that's the equivalent of the world's population shrinking to London in the southeast in that short space of time. So obviously there was a massive difference. But when the lending shrunk to 16 million, was it because there wasn't a demand for it? Well, no, not at all. It was that there were no lenders out there to be able to actually lend and go ahead and provide those clients with the solutions that they required. So in 2011, that's when Shawbrook recognised the opportunity, and then they moved into the marketplace. And then that's where, in 2012, we saw the green shoots of recovery as well. By 2013, the secured loan market was up at 500 million, and by 2014, obviously we've just recorded 600 million, and 3 new lenders entered into the marketplace. So actually, we've come from a really sort of stormy place, and not an ideal place to be, to a market that we're really proud of. All right, it's a fraction of the size that it used to be, but there are the correct behaviours in the market now, okay, because there were very different behaviours back in 2007. So why did we enter the marketplace at this time? Well, clearly we established that there was a gap in the market. There was a demand for alternative finance solutions. We know that secured loans are beneficial for our customers. I've just put a quote on there from the consultation paper that's just come out from the FSE. They recognise that secured loans are beneficial for some customers. So what I wanted to get out of this was, okay, well actually, what do the market think? Because it doesn't really matter what we think, and it doesn't really matter what anyone else thinks. If no one else agrees with us, where are we going to get that business from? So we decided to ask, because I think that's the best thing to do when you're unsure of something. So I did a survey, and this survey was mixed between directly authorised individuals and also appointed representatives. And so we actually asked, and we said, do you think that secured loans are beneficial for some customers? Really straightforward question, nice and easy. 96% agreed, yeah, no, we do agree that they are beneficial for some of our customers. 4% disagreed. Who in the audience thinks here that they're beneficial for some customers? Yeah? So everything's in line. So on the back of that then we said, okay, well if you think they're beneficial, how many times have we actually recommended a secured loan as an alternative to a remortgage within the last 6 months? Now 42% of that audience said, well we haven't done it at all. And 84, now the maths doesn't add up because of course some of the same people responded, so that's why it doesn't both add up to 100. But 84% of everyone surveyed overall, there were less than 3 occasions in which they've actually recommended a remortgage over a secured loan. Okay, so what does this tell us then? Well, this image is going to come up a couple of times, so I'll give you a chance to get it. But it tells us that they recognise the opportunity, okay? They'd understand that you're taking my word for it, for those that haven't seen it, that there are 2 images in that picture. They see the opportunity, but it does illustrate the need that actually we do need to change perceptions within that marketplace, and there are ways that we can help. And we believe that education is a massive thing. Now, you would never know that, would you, with the academy that we've just launched, of course. But we do believe that that's a massive thing, and actually some people do struggle to get secured loans. And again, we know that, not because we've just made an opinion on it, but because we actually asked them. So this was last year's London Expo. We then decided to ask some customers. We said, look, what is it that stops you from writing more secured loans business? And some people said, well, actually, my customers have never asked me for one. Fair enough. I only deal with high net worth clients. I don't really do that kind of business. I don't have subprime clients. Now, with these answers, it was pretty clear that actually it wasn't so much that they didn't get these types of customers, but it was more to do with the fact that they didn't recognise when they were sat in front of them. You know, for example, my customers have never asked me for one. Well, they don't tend to, and they're probably not going to either, because it's actually more to do with the conversation that you're having and the scenarios, which we'll go on to in a second, and then thinking to yourself, okay, well, actually, a remortgage is a possibility, but in this scenario, is a secured loan another alternative? I don't really do that kind of business. Well, again, you know, what kind of business do they think it is that we do? Admittedly, back in 2007, 20% of secured loans that were written were on a self-cert basis. If they still think that that's the kind of business that secured loans is, then no, we don't do that kind of business either, so we're in agreement with them. But there's definitely, you know, some things that people can benefit from understanding, I suppose. And now my personal favourite one was a bit of a comment. It's a bit tongue-in-cheek, of course. I have to say that because compliance made me. I've been doing the job for 32 years. I can always push a remortgage through. And actually, that's the thing. When you're so experienced in your job and you have been doing it for that time, it is easy. You've got the relationships, you've got the know-how, you've got the knowledge, you know, the quirks, you know, everything, every little bit of detail, and you do understand that. But actually, in this whole world of consumer outcomes and customer outcomes, does it definitely mean that it was the best outcome for the customer? Well, maybe. But actually, if we look at secured loans as well, it's probably quite good to have as an alternative. So again, from a survey, what prevents you from writing more or any secured loan business? We were a bit more explicit, and we wanted to know specifically from people. So 62% was quite overwhelming, actually. They said fees and overall cost, that stops us. And interestingly, 15% admitted they didn't know enough about secured loans to actually advise their clients accordingly. Now, that's a really difficult message. Had I not done that survey, it's really difficult to try and tell a professional advisor, well, perhaps it's because you don't have enough knowledge. I'm not even going to go down that route because, you know, you don't need to hear that from me. But actually, some of these people were admitting and saying, look, we maybe could do to, with recognising the opportunities. So therefore, it'd be good to know a bit more about it. Hence the academies again. And then we felt the lack of access to technical knowledge, criteria, and actually their clients' perceptions stopped them as well. Now, they said their clients' perceptions. I would argue that potentially it could be their own perceptions as well. And that's why we're trying to have a look at that. And then ultimately, in today's day and age, it is the client outcome that actually drives this requirement for us and our brokers to change their perception. And there is a need to try and plug that gap. Now, just to touch very briefly on the credit directive, the FSE actually do recognise, of course, that the secured loans are beneficial for some customers, but they also recognise that there is a greater need for consumer protection out there. And that's why, under the consultation that they launched last year, they're actually seeking to align first and second charge mortgages under the credit directive, which comes into play next March. And that is one of the main things that comes out of it. One of the main things in the first few paragraphs within that paper is the fact that first and second charges they'll look to align the two so that it's much easier for, of course, brokers and lenders and customers to understand exactly what alternative finance options there are available. There were 3 other points that came out. Now, I have to say, of course, this is under consultation, but it certainly does look, the final paper comes out later on this month, ideally. If we embrace the credit directive, it does give us a great platform to actually do this education and actually understand secured loans, and so that it's not entirely different and a million miles away from what we always do on a day-to-day mortgage basis anyway. One of the main things that the support from the actual FCA are going to give is the disclosure part of it. So actually, it looks set to be that you have to disclose secured loans as an alternative finance option for customers. So when you're talking to them about remortgages and about the benefits that are there, it's also going to be important for you to mention further advances and secured loans. So all of those options would need to be mentioned at your initial disclosure stage. Now, I don't know about you, but certainly I used to be an advisor, and if I was an advisor and my client said, oh, tell me a bit more about that secured loan option, I'd certainly want to be able to answer those questions, which is why we feel it would be good for you and to have access to that lender to be able to do so. The second point is actually they're going to be made an advised sale. Now, the reason for that is because when customers were actually talking to their financial advisors about options, even when you were disclosing to them that this wasn't an advised sale, that customer walked away from that conversation thinking that they had received advice, because as far as they were concerned, they had spoken to an industry professional about that subject. So to take any ambiguity away from it, any grey areas, of course, are all going to be advised sales. Now, to be able to give advice on something, of course, needs to be a bit more thoroughly understood. But to help all of that set into line, then the sales process will align with first charge lending, and that's certainly what looks to come out of the credit directive. And those are the main highlights that are under consultation, but the final guidance will come out later on this month. So we understand then the history, we understand where they've come from, we know that we could maybe do with changing perceptions, we understand all of that, but what about how it actually plays out into your business on a daily basis? How do you know if they're actually suitable for your clients? Well, you'll be able to tell me best. Do you have clients that are on lifetime trackers, interest-only mortgages? Do you have clients that are stuck into products that have got high early payment charges? Maybe they've been sort of trapped out of the market as a result of the mortgage market review, which came in last year. And actually, debt consolidation is a massive one as well. How many times, if you're part of a network, or if you just are aware of this for your own compliance requirements, how many times do they sort of tell you, make sure you know exactly what you're doing, and you're covering your backs when you're telling a client to actually bring all their unsecured credit, debt consolidate it and put it in and secure it against their property. These are all things that are big concerns. So we want to be able to show you these alternative options that are there as well. When we think about some of the issues that came out of the mortgage market review, one of the big ones was affordability, lending into retirement and things like that. Now, it's not that we have special sort of stretches that we can do on our income or anything like that, but as a secured loan lender, generally we are more flexible with the types of income that we can take, with the scenarios in which we can actually help customers out, and therefore making it a bit easier to place than perhaps some of the first charge lenders. So, for example, clients that have been self-employed but they've only been trading for 6 months, well, actually, that's no big deal. We can help out in those scenarios. What if they've only been employed for a couple of months? Maybe it wasn't continuous all the time. Maybe they've been in and out, but now they're permanent, but it's only just started. Even things like income, how difficult is it sometimes to get lenders to look at foster care, carers allowance, rental income. So the fact that we can actually take all these alternative options, look at the fact that they might not have been there for a long time, and be a bit more flexible. I have to say here at this point as well, actually, everything that we do is individually underwritten. There's no computer program that's telling us, nah, the score doesn't fit, we don't fancy that one, we don't like the look of that one. They're all individually underwritten. So actually, if you feel that you have a good case there, but you just can't get anyone to listen to you, then again, that is a really prime scenario for a second charge loan or a secured loan. So all of those would be 100% accepted. And some of the other scenarios, when we look at credit issues, recent and historic, there's more and more lenders now that are accepting CCJs, defaults. They're becoming a bit of the norm. Maybe they'll turn a blind eye to missed credit card payments. But you still struggle, I believe, and certainly brokers are telling me, to exit customers that are perhaps in an IVA and maybe just want to get their life back and stop being tarred with that brush. Debt management plans, they want to clear them. Missed payments, maybe they just need to repair their credit and they need an alternative option for that. And we were definitely able to help out in that scenario. Other useful scenarios, business purposes. If it's a new start business, it's probably not, in the same thing that a first charge lender wouldn't like that. Fair enough, but actually if it's a client that's actually looking to expand their business, buy their premises, just look at different machinery, ways in which they can help build on their existing business, no problem at all. Tax purposes. What about exiting a bridge? How many lenders are not actually all that comfortable and they wonder why they went into a bridge in the first place, like it's a bit of a dirty thing? Not at all. If there's a reason for it, and we have no issues with that at all. Inexperienced landlords, lower property values. We have a real, method of actually having a look at the individual case, assessing it on its merits, and taking the good bits out of it. If there's a case there to be done, we'll absolutely do it. And just to give you the USPs at a bit of a glance, we will go up to 95% loan to value. Not a lot of people actually know that, to quote a famous person. Up to 95% loan to value. And actually, more importantly, yes, the first charge lenders do consent to that when we're behind them. Because actually, of course, we're always in a second charge position. We'll do loans on paper up to $1 million. That's within our credit range without any hassle at all. But actually, we've done a loan recently for $2 million. So if you come to us and it's a good deal and it makes sense, but it's not quite within our criteria, that's how we've built our business. We use our criteria very much as a guide. It's there as our policy, but talk to us about the deals. Help us to understand why you believe that is a good deal for the client, and then we'll be able to have that conversation with you. Maximum ages, 80 on paper. If they have income, they're still part of a business, they're self-employed, talk to us if they're older than that. Even if it's a low credit score, even if it fails the credit score and you want an exception to that, we do AVMs. How many times have you actually struggled to get a valuation done on time and therefore it holds up the whole process? The overall flexibility is where we really, really excel, and where secured loans can then really help to develop your business as you start to understand exactly where they fit into. We're not trying to replace remortgages, but we absolutely want to be right there for those inquiries when they're just outside or they don't really fit there. But of course, going back to the 600 million conversation that we had earlier on, it's more about client retention. Don't lose these clients to affiliate sites. So that the secured loan market's worth 600 million. We know that the majority of that came from direct, consumers going to your affiliate sites, Money Supermarket, things like that, because they went off on their own to try and find a solution when perhaps they weren't able to find that through their financial advisor. Don't lose those clients. In addition to not losing them, these affiliate sites are very aggressive. They're not just going to take that secured loan and be happy with that. They're going to look to write the life insurance, the income protection, and guess what? If you've done that previously, not only do you actually lose out on all those other opportunities, but they'll also be churned by these other providers as well. So it's so important to at least be aware of them, especially in light of the fact that they are about to become regulated contracts, and they are definitely a lot more credible than perhaps they used to be and used to have the attitude for seriously. So we do genuinely believe that we'll benefit consumers by equipping our brokers with this knowledge of alternative finance options, so that actually the customer can be confident that their advisors truly got all the options available to them. Yourself, as a consumer, if you were going to see a financial advisor and they were going to talk to you about a remortgage and that was it, fine. I know that you guys don't do that, but there will be some that do, So it's just to have all of these options available. So I've brought this image up again, because actually that does bring me to the end of my session, just about on time as well, actually. And if you need to talk to us, we're absolutely the lender to come to have a chat, bring us the cases, discuss them, bring them to our attention, see what you think. All right? Thank you for listening.